Hi everyone, welcome again to ACCA's Advanced Taxation video lecture. In the previous lecture, as you know, we have studied this income tax, which you can see on your screen. I've already opened our notes anyway. So we have seen how to make the income tax pro forma. Now we know how to make the income tax pro forma, but there were certain things in the income tax pro forma which we now need to see. Now, for example, this interest income, which says note 1. So we have to see what the interest income is and what is included in that. Likewise, there are certain other things as well which we have to see some more detail, like personal allowance. We will see some personal allowance details as well, and some other stuff, bits and pieces which are left in this chapter. Let's move to page number 2 without wasting our time on our notes. It's interest income. Now, interest income, as you know, that it will go into the savings column. Interest income will go into the savings column, dividend will go into the dividends, and the rest of the stuff will go into the non-savings. So in the interest income, what does it include? Interest income is received gross, as it says here, no grossing up is needed. However, there are certain exceptions to this rule, but as far as advanced taxation exam is concerned, most likely you will receive all the income which will be already grossed. However, if it isn't, the examiner will tell you. So in your case, you are lucky to have all the information grossed up, so no grossing up is needed. However, there is interest income nil rate band. Now, this is recently introduced. It was in the previous tax year as well. It says that up to a certain amount of interest income, you will not have to pay any tax at all. So it says interest income has nil rate band of £1,000 in the basic rate band and £500 in the higher rate band. Excess is taxable as per the given rates below, not below, basically the above, because we have seen it in the previous page. Okay, and it says that note the savings income nil rate band will be given to you in the exam, so that's the good news. This figure of 1,000 in the basic rate band and the 500 in the high rate band, you do not have to remember it. It will be given to you in the exam, okay, in the tax table. Right, all the other rates will also be given to you. Now, what does this mean of 1,000 in the basic rate band and 500 in the high rate band? Now, whenever the interest income, now if you go back to the income tax pro forma on our notes, now this interest income, when it goes into the savings column, if it is within the basic rate band, if the total income is within the basic rate band, then first £1,000 will be at the rate of 0% in the savings income, and if it is higher rate band, if the total income is in the higher rate band, what is higher rate? Now the bands are given to us below, as you know, that up to 34,500 is basic rate band, and above that it's a higher rate band. Okay, so if savings income falls within 34,500, then first 1,000 will be at the rate of 0%, the rest of that will be at the rate of 20%, which is the tax rate given. And if the savings income falls within the higher rate band, then first 500 is nil rate band, and the excess will be taxable as per the rates given above. So what are the rates in the savings in the savings income? It will be 40% if it is in the higher rate band. Okay, so that's our interest income. Now, after the interest income, the deductible interest. Now, if you go back again, if you go back to the income tax pro forma, there was something called deductible interest, if you remember. See this one, deductible interest. Now this deductible interest, what is this deductible interest? Sorry, not this dividend income. The where is the deductible interest? Sorry, where is the deductible interest? Here it is. This deductible interest. Deductible interest is the next one. Let me just move to the next page. So the deductible interest will be given to you. I've actually given it to you here. So the deductible interest, what is the deductible interest? As I said earlier as well in the previous video lecture, that the deductible interest means that if you take in a loan from the bank, of course the bank will charge some interest, and you have invested that loan in certain things, in certain projects, then that interest will be deductible. Now what is that? If you can see here, the investment in partnership, sorry, where is that deductible interest? So if you have taken the loan and you have invested in the partnership, you have used that loan to purchase the plant and machinery for employment, and you have used that loan for the investment in employee controlled company. What is the employee controlled company? We will see it later on. And if you have invested in the cooperative, so if you have taken the loan and you have used that loan in these four, you have taken the loan for these four purposes, in any of these purposes, then interest paid on that loan will be deductible. Okay, so that's why it is called the deductible interest. Right, so after the deductible interest, the personal allowance is given to us. The personal allowance for our current tax year, the personal allowance is 11,850 pounds for our current tax year. If adjusted net income is 100,000 pounds or less than that. Now, what is adjusted net income? Total net income after deductible interest, but just before personal allowance. We'll have to deduct the personal pension contribution out of that. But please remember, we have to take the gross amount of the personal pension contribution. So if we take the net income before personal allowance and deduct the personal allowance, personal pension contribution out of that, that will be called the adjusted net income. Okay. Now, if adjusted net income is 100,000 pounds or less than that, our personal allowance will be 11,850. Now, personal allowance basically a personal exemption given to us in the UK by HM Revenue and Custom. So HM Revenue and Custom says if someone is earning up till 11,850, they deserve some allowance. So they deserve some relief. So if you're earning 11,850 or less than that, you do not have to pay any tax at all. Or even if you're earning more than 11,850, up to 11,850, you do not have to pay any tax, and up to over 11,850, you have to pay some tax according to the rates given to us on page number 1. Now, purpose of this personal allowance is to give relief to the needy people, to the poor people. However, HMRC says that if you're earning more than 100,000 pounds, then you are not a needy person. So your actual personal allowance of 11,850 will be reduced. It will not remain 1150. The more richer you get, this personal allowance will get reduced. Okay. So if adjusted net income is 100,000 pounds or less than that, your personal allowance will be 11,850. However, if your adjusted net income is over 100,000 pounds, then your personal allowance will be reduced. Now, how it will be reduced? As I said, the more rich you get, the personal allowance will be reduced. Now it says there is a formula to do that. So we will take the actual adjusted net income, assuming it is more than 100,000 pounds. So we'll take actual adjusted net income and we deduct the 100,000 pounds out of that. So basically what we are looking at is how much we are earning more than 100,000 pounds. So excess over 100,000 pounds, assuming if adjusted net income is 120,000 pounds. So we'll take 120,000 pounds less 100,000 pounds. So 20,000 pounds is the answer. Now, what will we do with this 20,000 pounds? We will divide that by 2. So we'll take half of it. So 20,000 divided by 2, it is 10,000 pounds. Now, this 10,000 pounds will be deducted out of the actual personal allowance, the standard personal allowance of 11,850. Okay, so that's how whatever the remaining amount of personal allowance is, that will be our reduced personal allowance. Okay, so if you can see on your screen as well, note P says adjustment to the personal allowance of 11,850 if adjusted net income is over 100,000 pounds. So how will we do it? Step number 1, calculate the excess. We'll take adjusted net income less 100,000 pounds. Then we'll divide that by 2. So we'll take half of it, or the 50% of that, and then deduct the half of the excess amount from the personal allowance of 11,850. However, this personal allowance which we will reduce, it cannot reduce below 0. Okay, so maximum it can reduce is to 0. Okay, it cannot go into negatives. Now there is an exam tip, small tip is given to you below, that personal allowance will be nil if adjusted net income is 123,700 or more. Now just do some calculation. If adjusted net income is 123,700, what would be the personal allowance? So 123,700 less 100,000 pounds divided by 2, I hope that it will equal 11,850. Okay, so if it equals 11,850, then we will deduct 11,850 out of 11,850. The remaining amount of personal allowance will be 0 anyway. So that's why the personal allowance will remain 0. Okay, so whenever adjusted net income is over 123,700, that individual will not get any personal allowance at all. Okay, right. So that was our adjustment to the personal allowance. Now there are certain sources of income which on which we do not have to pay any tax. So them are called exempt income. So income from savings certificate issued by the National Savings and Investment Bank, premium bonds, individual saving accounts up to £20,000 per year, and child benefit. Now what is the child benefit? It is a certain amount which is given to the to the person who is taking care of one child at least. Okay, so that is also exempt income. So these are the incomes which are exempt. If some of these are given to you in the question, more than likely you will not get these, because these were examined at the F6 level, well, taxation level, the earlier level of this paper, fundamental level of this paper. But at this level, I do not think that you will get this, but anyway, you should remember this. Okay, now note number 5, child benefit income tax charge on page number 3 of your notes. What is child benefit income tax charge? Now child benefit, as I said to you earlier as well, child benefit is given to the people who do not have any sources of income. Now what was the benefit of the taxation anyway? Now benefit of taxation was for the welfare of the people. Okay, so government collects the tax from the rich people and then it divides among all the people who are needy. Okay, so one of that benefit is to give the child benefit to the people who do not find any work, who cannot earn any money, so because they are needy people. Now if you are a needy people, if you do not have enough money, then HMRC says that you can get child benefit. Okay, the government will give you child benefit. You can claim from government. Now if someone is claiming child benefit and after claiming the child benefit they get employed. Now when they get employed, now they are earning some income. Now HMRC says that when you get employed and you get a handsome salary, or if you're getting any handsome income, then you should not receive the child benefit. Now if you still keep receiving the child benefit, even if you get employed and you are earning more money, or self-employed and you are earning more money, then you will have to pay the child benefit income tax charge. Now what is that threshold of that income? Now if you're earning more than £50,000, if you're adjusted net income, again it's not net income, it is adjusted net income. What is the formula of adjusted net income? Net income before personal allowance less gross amount of the personal pension contribution. So that is our adjusted net income. So if our adjusted net income is over £50,000, then our child benefit will be reduced. So it will be reduced in what shape? That we will have to pay child benefit income tax charge to the HM Revenue and Custom. So how does it calculate anyway? So we will see that how much is the actual child benefit received by the person. So we will see that. And then we will determine how much is the adjusted net income. So we'll take adjusted net income, actual adjusted net income less £50,000, because £50,000 up to £50,000 there is no child benefit income tax charge. If you're earning more than £50,000, if your adjusted net income is more than £50,000, then you will have to pay the child benefit income tax charge. Okay, so we'll take the actual adjusted net income and we'll take £50,000 out of that and we will divide that by 100. Now why we divide that by 100? In order to reach on a percentage. So when we divide that by 100, we will take certain percentage. So whatever that percentage is, we will apply that percentage on the amount of child benefit received. And when we apply that percentage on the child benefit received, whatever the figure comes up, that will be the child benefit income tax charge. Okay, so as you can see on your screen as well, adjusted net income less £50,000 over 100 multiplied by the child benefit times whatever the percentage is. It says 1%, it's not 1%, it's actual percentage. Okay, and now it says that where adjusted net income is in excess of £60,000, then income tax charge equals to the child benefit received. Now it is obvious, for obvious reasons, when we take £60,000 out of £50,000, it equals £10,000. Now £10,000 divided by 100 is equal to 100, which means we have to pay 100% of the child benefit as child benefit income tax charge to HM Revenue and Customs. So whole amount of child benefit received will be child benefit income tax charge. So our child benefit income tax charge cannot exceed actual amount of child benefit. Okay, it can maximum be 100% of that. Now you might be a little confused on that. So let's do a little example here. With this help of this example, hopefully you should be able to understand this topic in a better way. Now my example which I've just created, it's a small example where it says, in this example, A and B are married couple. So A and B are, please make sure you write down this example, are married couple. With adjusted net income of £54,000, with adjusted net income, with adjusted net income of what? With adjusted net income of £54,000, and receives £5,000 as child benefit. Okay, now my question is, the requirement of this question is, what is required? What would be the child benefit income tax charge? Now I need to find out what would be the child benefit income tax charge. Okay, the child benefit income tax charge, we know that we have to take the adjusted net income less £50,000. So 54,000 is our adjusted net income less £50,000 is threshold. HMRC says is that if you're earning up to £50,000, you will not have to pay any child benefit income tax charge. However, the couple is earning £54,000, which is more than £50,000. So the amount equals what? £4,000. Now we have to take the percentage of this. So in order to take the percentage, we have to divide that by 100, which equals 40%. It is in percentage, so it will be 40%. Now we have to take the actual amount of child benefit received. Child benefit received is child benefit of £5,000, which is given to us in the question. And we have to take the 40% of that. So £2,000 is child benefit income tax charge. So that is our child benefit charge. Child benefit income tax charge. Okay. Now in this case, it was the adjusted net income was £54,000. What if the adjusted net income is £61,000? Of course, it is more than £60,000, then 100% of the child benefit of what? 5,000. So 100% of the child benefit will be child benefit income tax charge. What if it was £60,000? Still it is 100%. So whenever adjusted net income is £60,000 or more than that, then 100% of the amount received as child benefit will be child benefit income tax charge. Okay, so if it is 60,000, 70,000 or whatever, in that case 100% of the child benefit of what? Child benefit of £5,000. 100% of child benefit will be child benefit income tax charge. Okay, so this £5,000 was child benefit, and if it would have been £60,000, it would be 5,000 the child benefit income tax charge, 100%. Okay, right, so that was our child benefit income tax charge. Now coming back to our notes, please. Coming back to our notes, child benefit income tax charge. Our next thing is to cover in our notes personal pension contribution. Personal loss is done, exempt income is done, child benefit is done. Personal pension contribution. Now this, it says that given in exam tables, the personal pension contribution will also be given to us in the exam tax table. So that's why it says. Right, so what is the personal pension contribution? There's two types of contribution which you can make in your pension, and I hope that at this level you know what the pension is. Whenever you are working, out of your salary you are contributing some amount so that when you get retired you can rely on that amount. So that is known as pension. Okay. Now government encourages individuals to contribute towards the pension, because if they do not contribute towards the pension, when they get retired, they will rely on the government benefits. Now when they contribute themselves, then they will not rely on government, they will rely on their own money which they were contributing earlier. Okay, so in order to encourage the individuals, they give some benefit, they give some relief. So what is that relief? For in case of the personal pension contribution, we will see the employee based the occupational pension contribution as well later on, but for now let's look at the personal pension contribution. So HMRC says that if you contribute £80, I'll give £20 more, so you will get in personal pension contribution £100. So that is one benefit. Now if an individual pay whatever the individual is paying, they will only have to pay the 80%, the remaining 20% will be paid by HM Revenue and Custom. So that is one benefit. Another benefit is that in order to reach at the adjusted net income, because for certain things like personal allowance, like the child benefit income tax charge, we have to calculate the adjusted net income. So in order to calculate the adjusted net income, we have to deduct the gross amount of the personal pension contribution out of the net income. Okay, so it reduces our net income so that we can get more personal allowance. I hope that you are getting it. Okay, so that is another benefit. These are two benefits which I've just told you. The third benefit, now if you want to write down these benefits, you can do so. The third benefit is that whatever the gross amount of personal pension contribution is, that will be added in your basic rate band and the higher rate band. Okay, because there are two bands. So what is actual amount of the basic rate band? 34,500. That is the basic rate band, normal basic rate band. Now if, say for example, you have contributed £8,000 in the personal pension contribution, other £2,000 will be paid by HM Revenue Custom. What you will get in the actual personal pension contribution, £10,000. Now your basic rate band of 34,500 will be extended by £10,000, which is the gross amount of the personal pension contribution. So that is the third benefit. Okay, so now I've told you three benefits of contributing in the personal pension contribution. So that is why everybody is interested in contributing in the personal pension contribution, because they are getting so many tax benefits. Okay, so what was the one reason? You only have to pay 80%, other 20% is paid by HM Revenue Custom. The second benefit was that it will help you reduce your net income to reach at the adjusted net income, which will eventually help you avoid child benefit income tax charge, or to get the full personal allowance, okay, or the maximum amount of personal allowance. These are two benefits. And the third benefit is that it will help by extending the basic rate band and the higher rate band. Okay, now I've told you enough information. You can read so whatever is given to you on page number Page number 3 of your lecture notes, the personal pension contribution. The same amount, the same information which I've just told you is given to you in your lecture notes. Okay, I hope that it helped. After that, if you come to page number 4, dividend income nil rate band. Now, like the interest income, we know that there was 1,000 in the basic rate band and 500 in the higher rate band. For dividend income as well, there is a nil rate band for the dividend income as well. For dividend income, there is £2,000 of the dividend income nil rate band, regardless of the tax paying band. Even if it is a basic rate band or the higher rate band, you will get £2,000 nil rate band. So first £2,000 of the dividend income will be taxed at the rate of 0%. Okay, so that is our dividend income nil rate band. After that, our next topic is the income of the minor child. Now it says that income of £100 gross, or if it is less than that, which is directly transferred by a parent to a minor child, will be treated as child's income. Sometimes what happens is that individuals, what they do is that in order to pay less tax, because their income is more than personal allowance, and now what they want to do is they want to reduce it up to the personal allowance so that they do not have to pay any tax. In that case, what do they do is they transfer some amount to their minor child. Now if they are transferring to their minor child, then of course it is their own income. Okay, it is not the child's income. They are just doing it to avoid the tax. So that's what where this rule came, that it says that income of £100 or less, which is directly transferred by a parent to a minor child, will be treated child's income. If it is £100 or less than that, it will be child's income. However, if it is more than £100, which is directly transferred by a parent to a minor child, will be treated as parent's income. Okay. Now, why are they doing it? So that the individual cannot transfer some money to their minor child just to avoid some tax. Okay. So they cannot do that. That's why if it is £100 or less, it will be considered as child's income. If it is £100 or more than that, or more than £100, then it will be considered the parent's income. However, if it is this is only applicable in case of parents. However, if you have transferred to another relative, if that individual wants to save some tax and has transferred the money to the nephew, for example, or the niece, then in that case this rule will not apply. That will, even if it is more than £100, that will be considered the minor child's income. However, if he is really interested in saving the tax, then he might not be interested in transferring some amount to the other unknown person or the other relative, because he might run away with the whole money. So he was just wondering about the tax. He was just worried about the tax, and eventually he might lose all of his money. Okay, so that's why this rule is there, so that no one can avoid the tax. Now after that, it says the income on jointly held property. Now if a property is held jointly by a couple, then the income will be divided 50-50. It will be considered as 50-50. However, if they have made a joint declaration to HMRC specifying an actual proportion, then actual proportion will exist. Okay, if the question is absent, if the question is silent, then it will be 50-50. After that, it says the marriage allowance. This allowance is 1190 for the current tax year. Normally, it is 10% of the actual personal allowance. In this case, in our current tax year, it is 1190 for our current tax year. So the marriage allowance means that when one individual is earning more and other is earning less, then the one who is earning more need more personal allowance, whereas someone who is not earning more, that has unused personal allowance. Okay, so now that unused personal allowance can be transferred to the rich person, so that the eventual tax liability can be reduced of the couple. Okay, so basically 1190 can be transferred to the other individual. Now it cannot directly be transferred. The relief will be given at the basic rate band at the rate of 20%. So basically, whatever the liability of the individual is, we will take at the end, what we will do is we will take 1190 times 20%. So whatever the amount is, 238. So that liability will be reduced by 238. Okay. However, it can only reduce the liability to 0. It cannot create into negative or refundable. It cannot be refundable. Right. So there are a couple of examples given to us. It says for the tax year 18-19, Peter has pension income of £8,000, savings income of £4,500, and dividend income of £9,000. Okay. So now we have to do this example. Okay, so let's move to our notebook and start doing this example. Right, so Peter is quite a rich person. Right, so he's got okay, so he got let me come to the next page. Okay, so he got some non-savings income, savings income, and dividends income. In the non-savings, he's got, first of all, pension. So let's see pension. So he got some pension, and that's £8,000 of pension. Okay, so that is our non-savings income. He also got some savings income, and he also got some dividends. Total will be written here. So pension will go into the non-savings. Then he got a savings income. A savings income of 4,500. 4,500 of savings income, and then he got dividends as well. Dividends of how much? £9,000. £9,000 of dividends, £4,500 of savings £8,000 of pension. Altogether, how much? 21,500. 21,500. Please make sure you redo these additions and subtractions because I'm doing it without calculator. Okay. Total income. We have to deduct the personal allowance out of this. Less personal allowance. Personal allowance is how much? How much is our personal allowance? Our personal allowance is 11,850, isn't it? Our personal allowance is how much is the personal allowance? I think it is 1150, I'm sure. But I just want to make sure. I always want to make sure that I'm right or not. Yes, 11,850. Okay, so our personal allowance 11,850, which cannot be fully deducted out of this one because it is less amount. So the remaining amount, 11,850 less 4,500, what? 3,850. 3,850 will be deducted out of this one. Sorry, I beg your pardon because I've done some mistake. I should have deducted it out of the pension income first. See, I did the mistake. So £8,000 of pension income. Okay, so I will deduct the £8,000. First of all, I will deduct the personal allowance out of the non-savings income. Then I will deduct the remaining amount, 3,850, out of the savings income. Whatever the remaining amount is, 650, this will remain exactly the same. Okay. £9,000 and total of what? 9650. Okay, so that's our total of 9650. 11,850 will be deducted out of the total. Okay, so the 9650, please make sure you redo these figures because I've already done it, but please make sure you redo it. I might have omitted something. Okay, so that's our taxable income on which we have to calculate the tax according to the tax bands. Okay, now because it is a basic rate band, so a savings income will get 100% at the rate of 0%, 650 at the rate of 0%. Why? Because of the nil rate band. Whenever the savings income is within the basic rate band, it will be taxed at the rate of 0% up to £1,000. So the tax liability is 0. For the dividends, so that was our what savings income? For the dividend income, it is £9,000, so nil rate band is £2,000 at the rate of 0%. 0, so that is also nil rate band. The remaining 7,000 at the rate of what? What is the tax percentage in the basic rate band of the dividends? Right, is 7.5%. 7.5%. So whatever the amount is, that is our tax liability. We'll total that, it's 0, 0 and this amount. So that will be our tax liability in case of Peter. Right? Right, so if you could move to the next example as well. I'll just, I'll not show it on the screen because I'll just attempt it. Let me just check it on my note in the hard copy. Our example number 2. Now it says that for Alam the pension is £7,000 and savings income is £6,500. Now let's do that example as well. So for Olam, the pension is what? If you want to do it yourself, you can do it because it's not so difficult. It's very easy. So the non-savings pension is £7,000, whereas savings income is £6,500. Total, because there are no dividends at all, so the total would be, what's the total? Total is 13,500. Is it 13,500? $13,500. Okay, now what we have to do is we have to deduct the sorry, I will have to erase this. Now back to the pen. Not very good at these technological things. Okay, so first pension, and then it was the savings income. Savings, and the savings was 6,500. So 6,500 in total, 7,000 in total, altogether 13,500, 6,500, 7,000 total income, less personal allowance. £7,000 will be deducted out of this one. 4,850 will be deducted out of this one, and 11,850 out of the total. Okay, it will be 0. It will be 150, 15, 16, 150, 15, 1650. I assume I am right. Please make sure you redo these calculations. And here as well, 1650. So that's our taxable income. Taxable income. And we have to calculate the tax according to this rate, according to our tax rates, but on this income. This savings income is 1,650. We know that there is a nil rate band. Nil rate band, which equals 1,000, because it is the basic rate band, at the rate of 0%, which equals 0. So the tax on the savings income. Savings income tax. Okay, nil rate band at the rate of 1,000 at the rate of 0%. Now please also remember that the remaining amount, or this whole amount of savings income, it falls in the basic rate band or any other rate band. Please just let me know. Of course you can't let me know, but just think in your own mind that if it falls in the basic rate band or any other rate band. Now this, if you have checked it carefully, this income falls in the starting rate band, and if you remember that in the starting rate band, tax rate is 0 for savings income up to first £5,000. Okay. That is our starting rate band. Okay, at the rate of 0%. So eventual tax liability is nothing. They will not have to pay any tax liability at all. Now, if you go back to chapter number, we are at the chapter number 1, but I mean to say that if you go back to page number 1 of your lecture notes, I will just go through with you. Page number 1 of your lecture notes here. Now, you can see the tax rates that in the starting rate band, first £5,000 of the savings income at the rate of 0%. However, if it would have been non-savings income, then at the rate of 20% anyway, but only for the savings income, it is at the rate of 0%. Now in this case, because our savings income falls, it is way below than £5,000. So that's why, sorry, I thought it is. It is way below than £5,000. So that's why the income will be at the rate of 0% under the starting rate band rules. And first 5,000 at the rate of 0% in the nil rate band anyway. So that's why it was at the rate of 0%. Okay. So that's it for this video lecture. In the next video lecture, we will do the comprehensive example, which is given on the chapter number in the chapter number 1, page number 5. But please make sure in the meantime, if you want, you can do the comprehensive example yourself. So your homework is basically, we will do it in our class anyway, but your homework is to do the comprehensive example. Comprehensive example. Plus, there are certain other questions as well, which I want you to write down and which you have to attempt. So please write down one question for me and you have to attempt this. A and B are friends. A and B are friends with following income. Now this income is adjusted net income, which I'm going to tell you. So I'm repeating the question again. A and B are friends with following income. A has net income, which is adjusted net income, of £115,000, and B has adjusted net income of £130,000. So both of them are adjusted net income. For A, £115,000. For B, it is £130,000. Okay. Now this is adjusted net income. I want you to calculate what would be the personal allowance of A and what would be the personal allowance of B. And assuming that the third friend joins them later on with adjusted net income of £100,000, adjusted net income of £100,000, what would be his personal allowance? So basically there are 3 friends in total. First friend, which is A, his adjusted net income is £115,000, B's adjusted net income is £130,000, and third friend C's adjusted net income is £100,000. So what would be the personal allowance of all 3? Plus you have to do the example, comprehensive example as well. I will see you in the next video. We will do the comprehensive example. If you've already done it, then you can compare your answers to mine. In the meantime, do that question as well, which I've just told you. I'll see you in the next video then. Goodbye.